Hey there, everybody. Thomas with Basecamp Trading. It is Tuesday, April 7th, and we're going to take a look here at the S&P, or the ES, E-mini futures, and talk a little bit about what our expectations are for this market. So before we get started here, make sure you hit that like button and subscribe if you haven't already done so. Now, with that being said, let's talk a little bit about what we've seen here. And before we dive into this, full disclosure, I'm currently positioned short the stock market. Bearish market. I expect it to head lower, and I'm about to explain a couple of reasons why. First off, one big thing here, we were due for a retracement. We were due for a bounce. We expected the indices to climb back up some. We have now bounced and climbed back up a bit, which is what we were at. That being said, we're starting to come up into a very significant resistance zone here on this bounce. First off, we have the previous pivot lows where we had bottomed out in early 2019, first half of 2019, between 27.26 and 27.69. So 2700 to 2800 is that a resistance zone. It was previously support. Now it's turning into resistance. Also, we're coming up into the 50% retracement off of the swing high to low we had over the past few months, which serves as resistance as well. And another thing that I look for a lot of times is the weighted average price, volume weighted average price, which VWAP is what a lot of people call it. You'll many times see the market pull back, tag the VWAP, rally, tag the VWAP, rally, tag the VWAP, rally. Well, this time we broke down from it. You can see last time we bounced, after that first big sell-off, we tagged it and then sold off again. Now we've pulled back up and we're tagging the VWAP right in that area as well. So we have a lot of resistance here where we are. The other thing to keep in mind is it's very rare to have a V bottom. Now, we do occasionally have V bottoms. For example, back here, we had one on a weekly basis. But normally with a bear market, you do not end up with a V bottom. You'll at least try to revisit the lows, fail, and then go back up and turn. The other big thing is we still have not seen the economic reports be impacted, other than weekly jobless numbers, very significantly from shutting down the economy basically over the past several weeks. So with that being said, we're coming into earnings season and we're going to start seeing earnings reports and stuff that will be reflecting it, and we're going to start seeing economic reports that are going to be reflecting it. And it should those should also be bearish for the market and end up pushing the market down. So far with the jobless numbers, we keep exceeding estimates by quite a bit. So I expect the impact to exceed estimates by a bit, which again should also help with push this market back down. Now, this week, that being said, this week, the market is bouncing pretty strong. That's not too surprising. We normally bounce going into Good Friday. You've closed up, I think, 17 of the past 18 years on Thursday before Good Friday. So we normally see that holiday bounce. But longer term, I think we're going to turn around and at least come back down to the between 23 and 2400 area, back down near the lows again. And quite honestly, I wouldn't be surprised to just keep on pushing down further than that. Like I said, I'm positioned bearish in the market right now. I bought calls in SPXU today, this morning right at the open. Also bought shares in SPXU this morning at the open and decreased some of my stock positions. So keep an eye on that. We're looking for the market to roll back down. We'll see how it plays out though over the next couple of weeks. My time frame before May, I expect us to come back down. So in the next 2 to 3 weeks at the longest, I would expect us to start heading back down again. So that is it for me for today. Hope it helps. Once again, don't forget to like and subscribe. Stay safe. And until next time, everybody, happy trading.